Hello and welcome to The Trade. Before we get to the charts, let's take a look at what's going on at a macro level. President Trump rejecting Iran's response to a US proposal for peace talks to end the war, posting on social media that I have just read the response from Iran's so-called representatives. I don't like it. Totally unacceptable. Meanwhile, the UAE and Kuwait say they've intercepted hostile drones despite the ceasefire remaining in place. And in the US, employment increasing last month more than expected, with April's non-farm payrolls rising by 115,000 jobs, which has reinforced expectations the Fed will keep rates on hold as the war fuels inflation. Household employment decreasing for a fourth consecutive month, but was offset by continued contraction in the labour force, keeping the unemployment rate at 4.3%. US Treasury yields fell following that report. The US 2-year down to 3.89%, the 10-year at 4.35%. Australian 3-year government bond yields were around 4.65 and the 10 close to 5%. The US dollar was down on Friday. The Aussie currently trading at 72.4 US cents. Let's now get across the charts that matter with the focus on blue chip stocks to buy, hold and sell. Michael Gable joining us from Fairmont Equities. Michael, welcome back.
Thank you.
So let's begin then with the positives then, shall we, in stocks to buy.
Yep.
Top of your list is Woodside. Interesting, obviously we know how well that's done given the energy crisis that continues globally. What do you see?
Yeah, look, I'm still very bullish on energy. I think the consensus out there is that once this war is resolved, for want of a better word, oil prices will ease and energy stocks will go down. But I think the opposite will happen. I think I think oil prices will stay higher for longer. I think energy stocks are pricing in a much lower oil price in the future. So I think they're actually quite cheap and representing a really good opportunity. I think there was a big sort of demand-supply mismatch in the energy sector before the Iranian war. We were quite overweight energy leading into it, and I'd be a buyer in any dip. So if we look at a daily chart of Woodside, we could see that, it did have that break above that resistance line in early March. But I think the recent pullback's an opportunity. To me, it looks like a bull flag. So between those diagonal blue lines, I think is a bull flag. We're at the bottom of that. I think it's worth buying. I think the next sort of major resistance point from here is near $40. So I think we're going to get to $40 by the end of the year.
$40, that's a significant move from where we're at right now. All right, that's the view on Woodside. Let's head to one of the largest miners in Rio. Look, obviously that iron ore price has held up, but it's more diversified than that. What do you see there?
Yeah, so Rio has, it did this a few months ago, but it's broken out of a long-term resistance line. So I think despite the big gains that we've seen recently, there's still quite a bit more upside to go. So if we have a look at this monthly chart, so this is a chart going back over 20 years, we could see that earlier in the year, late last year, Rio broke above that blue resistance line, and that resistance level had been in place for about 5 years. So the general rule of thumb is the longer you have these lines in place for, the bigger the move when it does eventually break out. So breaking above a 5-year resistance line isn't going to result in a 5-month move. You're going to end up with a move that lasts quite a bit longer than that and goes quite a bit higher. So I think any dip in Rio is an opportunity. I still believe bigger picture we're in a commodities bull market. And if we look at the far left-hand side of this monthly chart, we could see what Rio did during the last commodities bull market. It went from about $30 to over $100. So I think we're still in the early stages of a big run in the next couple of years.
Let's now turn to a stock you would be holding at the moment, Macquarie, off the back of its result last week. What are key technicals you're watching there?
Yeah, so look, another blue chip stock. This one I think is worth holding. It's the only financials the only financial stock that my clients hold at the moment. We got out of the big 4 banks a few weeks or so ago. If we have a look at the weekly chart of Macquarie, a couple of key aspects that make it look very attractive. Firstly, over the past few years, we could see that every time Macquarie's had a decent dip, we've seen some good buying step in, and I've indicated that with those blue arrows. So since 2022, we could see that it has been forming higher lows. Every time it dips, the buyers step in, doesn't quite make the prior lows, so that's a positive sign. Look, in the past few years, it has struggled to get above this sort of 240 region, so that horizontal blue line on the right-hand side indicates that resistance line. So we're back up at that resistance line. They had a pretty good result last Friday, but I think the fact that the market was down Friday and down today has kept a lid on Macquarie for the time being. So look, I'm happy to hold it here. I think what would turn it into a buy, if we could see in the next few days, this selling pressure ease off and Macquarie could properly break through that 240 region, then that would be the start of a new uptrend.
Let's now turn to those stocks to sell. CSL, my goodness, Michael, out with a downgrade today. What have you done with this stock and where to from here?
Yeah, if only there were signs, Andrew. If only there were signs. Look, I mean, we shouldn't joke about it too much, but obviously it's in a downgrade cycle. This is a monthly chart of CSL. Look, I've lost money on CSL. I've made money on CSL. Most recently, we were buyers in July, and then when it broke under that lower blue line, we took our medicine and got out of there. And look, this is a chart that I brought along to AusBiz last week on the call, and highlighted that, look, this is a stock that is now entering a long-term, well, it entered a long-term downtrend last year, and there's just no signs of support yet. And obviously this is a chart that I produced before today's fall, and on the way into the studio, the stock's under $100, so back to where it was in 2015. So, there'll be, again, we'll hear in the next few days, there'll be plenty of analysts saying that it's overdone and it's a buy and it's a quality company and it's great if you're holding it long term. Well, if you held it long term, if you bought it 10 years ago and decided to hold it long term, you'd still be flat, to be honest. You'd have no capital gains. So how long is long term? Look, I think that until this downtrend is over, until the downgrade cycle is over, there are better places for your money. So yes, under $100, I'd still be a seller of CSL.
And finally, Pro Medicus certainly has been the market darling. The glow has faded though.
Yep.
What does the chart tell you?
Yeah, also another ugly looking chart. I mean, this is a stock that we've been involved in before and have done well out of, but it is entering, well, it has entered that a long-term downtrend. Now, this is only a daily chart, but what's interesting is, despite the big move down last year, despite the huge rally in overseas tech stocks, the bounce in the past several weeks on PME's been fairly weak. So the way I'm interpreting this move higher in the past couple of months is that of a bear flag. So what I mean by that is, we've got the downtrend. If we could see sort of in the middle of the chart, downtrending PME, and then towards the right-hand side, we could see it trying to go up. To me, that just looks like a short-term counter-trend move. And I think when that's over, it'll resume the downtrend. And I wouldn't be surprised if we see PME under $100 as well. So no good signs of support yet. Again, this is one that we don't need to be in. I think there's better opportunities out there.
Michael, thanks for joining us from Fairmont Equities.
Thanks, Andrew.
And that is The Trade.